When you look at a lot of the commodity-rich currencies, it seems that they haven't really followed the price of oil. They're looking at other things.
So what you have in the commodity market is actually is a very split market. You see that industrial material prices have gone up quite significantly over the past few weeks and months. When you look at, for instance, copper broke out of a consolidation environment, and you have at the same time you have oil trading in a lackluster environment. And I think that has a lot to do with two factors. One is a much more long-term, and that goes back to the Paris Climate Conference in the year 2015, in which it was suggested if we are going to burn all fossils we have, the climate would be not sustainable. And they came up with a conclusion we can only burn about 2/3 of non-fossils. So the question we have to ask ourselves is actually what is the price of 2/3 when 1/3 is useless? Then the second point is that and you have the chart over there already printed. When you look at the second leg of the reform of the US administration, that is the energy reform.
Yep.
And what you do see is that we are seeing substantial funds moved into the oil sector. Shale is developed, and shale price production costs are declining. So it is currently estimated between $35 and $39. Now, that actually means you need to get a price below 39 before you get a significant impact on the rigs. And if you translate that then into FX, then you have actually to make in the foreign exchange markets a differentiation between what is a normal commodity currency and what is the oil currency.
Right.
Now, the US dollar has actually converted into an oil currency, what we should not forget. So America has become a significant oil producer. It is now the third biggest oil producer, soon to be the second. And what you see, too, is that the oil imports of America have drastically reduced. That used to be 11 million barrels. That is now down to 7. And oil exports are on the way up. And that means that the US dollar, each time an oil is coming down, the US dollar goes with it.